Good morning and welcome to your Financial Empower Hour. This is Jason Cryderman with Great Lakes Investment Advisors. Happy Sunday to all my listeners. Happy Sunday to all my viewers. If you're catching this when the show airs, but if you're catching it at another time, happy day to you, whatever day it is, wherever you are when you're catching and listening to my show. And thank you so much for being a listener. If you're one of my viewers, you can see my awesome co-host, Mr. Tony Shore, who's on here every single week with me, Tony. And this has been 2 years. I think we're over 2 years now having you as my co-host. It's been an awesome ride. It's been a great 2 years.
It has.
Tony, over the years, and again, for my viewers, you're able to see this live on the screen. Over the years, Tony, we've been able to get some really, really good guests. You've been able to get some of the top portfolio managers at Gradient Investments. We've been able to get some other awesome other guests out there on my show. But I don't know if we've ever had anybody, Tony, as beautiful as the blonde sitting next to you. So
we've had your son. I know one of the biggest guests we've had on, big as far as popularity is Carson, right?
Well, that's true. I kind of forgot him now. He's not as pretty as the one you have sitting next to you today. No. He's definitely not as pretty as Lisa. I think he's got a bigger attitude than her. That's for darn sure.
He came on with a strapping attitude, and over the last 2 years, I probably wagering against the Lions, I've probably lost a lot of money to Carson. How old is Carson?
Carson will be 13 coming up here in June. And between you and him, boy, when I get him on the show, and I'll probably have him on in a couple of weeks when he gets on spring break or has another break from school. And especially when it gets into, as you mentioned, football season. He loves coming on the show in the fall, Lisa, so to bring you up to speed. So Carson and Tony, they like to gamble, little friendly wagers with each other.
Vikings and Lions. Yeah, I'm a
Vikings and Lions.
Fan. He's a Detroit Lions.
There's a troubled fan when you're a Vikings fan, right? That's about all I know about that.
Yeah.
Well, last year, it didn't end up really as well as we thought it could have last year. But and Carson's pretty, should we say, feisty and cocky. I don't know where he gets it from. Most of the listeners are like, no, where does he get that from?
Either.
He must get it from his mom.
It must be. Other side of the family must be, but it's okay. We still accept him. We're not going to kick him out. But again, I want to get back to you. You're right, Tony. Carson is maybe one of the most exciting guests we've had on the show just because of his attitude and you and him going back with humor wise and really poking at each other when it comes to which team's going to win and what happened to your team last weekend. But today on our show, Tony, you overdid it once again, bud. You outpunted your coverage once again. I mean, take a look to your left. For my viewers that are watching today, we are so fortunate to have Lisa Schreiber on my show today as a guest. She's an associate portfolio manager with Gradient Investments. Lisa, thank you so much for being on the show. We've tried in the past to get our calendars to line up. You're so darn busy flying from across the country, one state to another, and being on shows and being on CNBC and Fox and all these awesome networks. It truly is a privilege to slow you down for a half hour, an hour, get you on my show. And really, I want to pick your brain today about what the heck has been going on. We're going to talk about some political stuff. We're going to talk about the Middle East global conflicts. We're going to talk about AI. We're going to get into it today, listeners. We are really going to talk a lot about in the trenches, because you're able to hear today from absolutely one of the best, Lisa Schreiber, portfolio manager of Gradient Investments. So again, welcome, Tony. Good morning. Welcome, Lisa. Thanks for being on my show today.
Thank you so much for having me. What an introduction. Wow, I'm fired up now.
Yeah.
Well, it's well-deserved. It is well-deserved. Yeah. And so again, for my viewers and listeners out there, hang on right now. I mean, this is going to be an awesome show. Before we get into it, though, and Lisa, Tony and I always in my first segment, we like to catch up on family. What's been going on, and Tony, and with your family in the last week or two since we recorded. I try to catch Tony and my viewers and listeners up on what's been going on with my busy family in the last week or two since we recorded. So Lisa, we'd like to start with you. I guess maybe start off by telling my viewers and my listeners a little bit about you and who you are personally. Before we get into the professional life, let's take the first few minutes here with each other and let us know personally, outside of the trenches of Wall Street and Gradient and managing money. Tell us about Lisa.
Yeah, so Lisa Schreiber, as you said, bear with me on the accent here. So I think everyone can hear that I'm not originally from the US. I'm from Austria originally. So I live in the US for, yeah, it's coming up to 4 years now.
Okay.
And I moved here together with my husband. So he got transferred by his employer, and I was the plus one. I was in for the fun. Usually there's
Along for the ride.
Right. Usually there's one responsible and a not so responsible part of a marriage, right? And he told me about the possibility that he got transferred to the US by his employer and kind of wanted to pick my brain on it, what I think about it. And I was like, hell yeah,
Let's
like
go,
I'm ready for
yeah.
the adventure. Let's go. So it's been a hell of a ride. It's absolutely fantastic. Minnesota is a great state, great people. It's fantastic.
Awesome. Wonderful. So been over here for 4 years now from Austria,
Mhm.
and you and your husband, do you have any children, any pets, and what do you do on the evenings and weekends? What keeps Lisa and her husband busy?
So we do not have kids. We just have one very feisty cat. So he rules definitely the household. His name is Sir Edmund Ferguson, and that should tell you about everything about his attitude. Like, yeah, he is the ruler of the household for sure.
Very privileged.
Yeah, very
Yeah,
privileged.
sounds like, yeah.
Definitely. We live in Uptown, so I'm the city girl of the team. We always make fun.
Okay.
The rest of the team is all outside on the countryside, and I'm like right in the city. Yeah, we like to travel and kind of be out and about and enjoy all the good thing the big city has to offer event wise and all of that, trying new restaurants. So that's really, and maybe a fun fact about me as well that you can for sure get a good laugh out. Yesterday, Sunday, was the time when I put down my Christmas tree. So this should tell you about
Oh.
everything you need to know about me.
March
So
1st?
March
Your
1st.
your poor
Christmas
husband.
Yeah, well, that's you broke a few rules.
Yeah,
of
definitely. I'm a rule breaker.
There's societal rules about how long you're allowed to keep a Christmas tree up. And
Definitely.
you
I broke them
overshot
all.
that by at least a month.
And it was not
March 1st is a little bit too long.
Yeah.
Yeah, I know. I just, love the vibe. And as long as there's snow out there, and especially in Minnesota,
Well,
it can
sure.
get long and cold. And I was like, at least get a little bit of holiday bliss still going. But again, yeah, it's a little bit embarrassing, but you have to roll with it.
No, I love how you just throw it out there. Like nobody even asked for you, and you're obviously not shy. You're very confident about it. You're like, what the hell? I left my tree up till March 1st. Not a big deal. So
Right.
that's I love it, Lisa. That is awesome.
That is
all
awesome.
the time. Like, all the time I've got to spend with Lisa. So again, for my listeners and viewers, I travel quite a bit throughout the year, going to different elite advisors conferences, whether it be over in Minneapolis, Minnesota, where Gradient is, and that's where Lisa's stationed right now with Tony, or it's one of the elite conferences they have anywhere across the U.S. or even we've been very fortunate to be able to travel sometimes outside of the U.S. for conferences. And Lisa is always so just free-spirited and free-willing. And there's no bigger smile. There's no better hug. Like when we see her coming down the hallway and she's running towards us, it's like a movie in the ocean, running down the beaches. And here comes. So for her to say that's the name of her cat, that does not surprise me. And for her to say
surprise.
city girl and does not surprise me. And for her to say that her Christmas tree just came down Sunday, March 1st, does not surprise me at all. So
actually, that one did surprise me a little bit because
Yeah.
I understand leaving it up a little longer than some might, but I know some people that say New Year's weekend,
Mhm.
and that's
I
a
know.
little too early for me.
Yeah.
We usually leave my lights are still up on my house, but I haven't lit them. I'm waiting for the snow to melt before I take my
Well,
lights
so it's safer to take them down, and warmer.
right. Yeah, exactly.
But why take them down at all? Why
well,
not just leave them up and just relit them
we
in
have
December?
a neighbor. We have
Then
a
you are the
neighbor
first
that
one.
does that. Yeah, we have a neighbor that does that. But yeah, why not? I guess
There are
we
some
could.
people that do. Yep.
Yeah, we could. But I want to ask Lisa. Now you've been here in the U.S. for 4 years.
Mhm.
Did you, when you were in Austria, where you're from, were you working in finance there as well?
Mhm.
Then
Yes, I was working in finance already. And I was more like on Jason's side of the business, more client facing. And I was a private wealth advisor for high net worth clients, mostly in investment, consulting, and insurance. Kind of rebuilt the portfolio on our own and asset allocation and all of that. And I studied finance, and wanted to go a little bit more deeper in the background in constructing and managing portfolios, but still be, have the other side as well, right? Be exposed to advisors and meet clients. And I think I've really hit the jackpot with working at Gradient because I can do both, right? I'm mostly managing portfolios and kind of helping our clients and Jason, your clients, kind of more in the background, but also every once in a while being able to attend client events and kind of see our advisors in action and meet our clients that we ultimately serve. So that's always very special to me. And I think I have the perfect mix of both worlds, I guess.
That's
That
great.
works out perfect. Yeah, I'm glad. Great question, Tony. I'm glad you asked that because it's always awesome to learn, what's the background behind who we have on our show and our guests, and especially for my listeners out there, my listeners that are clients of mine or might become clients of mine. Gradient Investments is a very large, very fast growing fiduciary third-party wealth money manager, and we use their portfolios. And so a lot of people say, gee, who's managing the money and how do they do it? And what is their background and how do they, well, right now you're live on my show. Lisa is one of them. We've had Keith Gangle on the show. We've had a number. We have Jeremy Bryant when he used to be with Gradient on the show. We've had Tyler Ellegard on the show. So it's really cool to hear from you guys, Lisa. And I always tell my clients, you guys are what I call in the trenches. You're in the know on the daily, on the hour, on the minute. And it's not something that just goes 9 to 5, Monday through Friday, as we know now, because our world is so global. Our markets and economies are so global. And that's something we're really going to dig into on our show today is we're going to talk about. So again, when we record this show, it is Monday, March 2nd, but as you guys listen and watch my show, it's at least next Sunday because we air these on Sundays. So right now, though, as we record, there was just some craziness going on in the world. Happened last Friday, Saturday, Sunday over the weekend with Middle East conflicts, the war in Iran. So I don't know where that sits by the time you listen to this show, but Lisa's going to give us some insight. What the heck could this type of impact could these things have on our stock markets, on our economy?
Right.
So that's really what we're going to get really, really deep into in the show today. And we're going to talk about some AI. We're going to talk about Supreme Court. We're going to talk about the overall markets. What might the markets do through the rough patch here, and then maybe into and through the rest of this year, 2026.
All right. Well, I can't wait to get into that. Before we do, I want to let our listeners know how they can get a hold of you, and they can do one of a couple of different things. That just by calling or going to your website, they can set up a no charge, no obligation consultation with you and the team there at Great Lakes Investment Advisors. Or they can get a copy of your book called Empower Your Retirement. We're giving away 10 copies to the next 10 people that contact Jason and his team at Great Lakes. All you have to do is call this number I'll give you and tell them you heard about it on the show. Or if you just have questions about what Lisa talks about on the show, you want more investment advice, some personal advice, we're going to give you an overview of what's happening. But for personal, everybody's situation is different. So Jason and his team can work up a plan for you. Give them a call. Again, it's a no charge, no obligation consultation. 989-835-7203. That number again is 989-835-7203. And here we are on your Financial Empower Hour. I'm your co-host, Tony Shore. I'm here with our host, the man with the plan, is Jason Cryderman. And a huge get for the show, Jason. It's all due to you. You gave me the credit earlier, and I wanted to correct you on that. Jason lined up our guest. That's Lisa Schreiber. Lisa's been doing this a long time, working in finance, investments, high net worth clients, and being a portfolio manager for Gradient Investments. So, Jason, why don't we kick it off and let's start asking Lisa some questions here. There's a lot going on.
Yeah, there's a lot going on. And I think it is important to point out, Lisa, this is really cool, the experience you have in your background, because not only are you a portfolio manager, and again, that's what I tell all my clients and my families that I am so fortunate to help manage money for, that you people are in the trenches. You're behind the scenes. You're in the know of what's going on. You're the ones that do all the research and make all those decisions on managing money for families. Yet you also have had the experience, Lisa, on being on actually being an advisor, where you helped families with asset allocation, with building management plans, allocation, diversify, review those portfolios, and then you would entrust into other people to manage the money out there. So having both sides of that spectrum, that's really the whole pie. I mean, that's all the ingredients you need. And that's one of the reasons, Lisa, that you are so successful and you are so highly sought after, is you're all of it. Like you're the whole show. And so it's awesome to be able to bring you on my show and be able to share your wealth and experience and knowledge with my listeners. So again, thank you for that. But let's dive right in. There's a lot going on out there. As I mentioned in the last segment, we're recording this on Monday, March 2nd. So by the time you're hearing or seeing this show, it's probably already at least a week out, because we record on Mondays. The show airs the following Sunday. So some of this might, it's all relative, but some of it may not be 100% a connection as of what's going on today, right? So, but I have to start off with, as sensitive a topic as this is, as crazy it is in our world right now, we had attacks over the weekend. We have a war in Iran. We have Middle East conflicts. We have global conflicts. As unfortunate as those can be, hopefully it's not too tragic. It's not too unfortunate. We don't lose too many lives, and it's ended as peacefully as it can be, as quickly as possible. But shifting gears from that, what type of impact can something like the Middle East conflict and these types of things, what type of impact can that have on our equity markets, not only international markets, obviously, but our markets here in the U.S.?
Yeah, that good question. I mean, there were some developments on the weekends, and always when something like that happens, global conflicts, wars, escalations, people rightfully ask, okay, what implications on their portfolio does that have, right? What kind of implications on the overall market, economy, companies that has? And interestingly, and we can look at history, right? I mean, history doesn't repeat, but it often rhymes.
Mm-hmm.
So we can we can take a look at history and can see how it usually plays out when something like that comes out. And interestingly enough, and that might be a little bit counterintuitive for investors, that the US stock market, when we stay in the US for now, shrugs off global conflicts and the implications quite fast, actually. And again, there's always, obviously, it's very bad for people who are involved and tragic, but the stock market tends to be, so the volatility and the implications for the stock markets tend to be more short-lived. Even though that is the case, there are implications for the stock market. It can raise volatility. There's more ups and downs as investors trying to figure out, okay, what does happen, how long it happens. I mean, that's usually the questions that determine how long we will have impacts on the stock market. Where does it happen? How long will it spread to other regions? The severity and all of that. So that definitely has an impact of how long we have to deal with that in the stock market. Another implications that we often see in the short term is the typical safe haven demand is rising. And we see that today already, Monday, for example, gold, right? I mean, the typical safe haven asset out there is again living up to its reputation. Gold is rising. Then we see especially some turmoil in energy markets, oil especially. And that was happening already over the last couple of weeks, right? We had some talks. So this didn't happen overnight. So we had some ramp up to that, some questions of will the US attack the Iran or not for a couple of weeks, right? So we saw some changes in volatility in the oil markets already. And now we have the actual conflict and especially oil markets, because where it happens, Middle East, a lot of oil is going, a lot of the global oil supply is going through the Middle East. Obviously, we have implications there. And also when we look at the stock market itself, like what companies we might see implications and impacts, then it's usually there's a little bit of a risk off mode, right? Some sectors are, I would not say benefiting in that situation, but tend to do better as others. For example, there's more flight to safety, right? More larger companies that are more stable, more dividend payers, the blue chip companies, so to speak, tend to do a little bit better in these scenarios, other than, for example, some higher volatility tech names, right? So all of that being said, there are changes and there are implications, but usually it tends to be more short-lived.
Yeah, that's a good point to make. And I'm going to kind of inject a couple of things there. So volatility, right? Volatility, these types of things create volatility. However, you had also mentioned that this isn't something that came out of the blue and nobody knew about it. It's kind of been known that there's been issues and concerns. This has been like a boiling pot, right? And so people have already kind of been positioning. Money managers have already been and the markets, right? The markets really tend to price a lot of these things in, and so the volatility is there. We hope it's shorter lived than longer, obviously. I think one of the things you didn't really say the word, but you kind of hinted at it, was diversification, right? Diversify, because as though some sectors or companies may not do so good when there's an international conflict or an unpeaceful time, but other sectors or other companies or countries may do very well. So diversify. Be active. Either you need to be active with your own money, or better yet, trust in a company like Grady Investments, and trust in a fiduciary advisor like myself that can get the access to Grady Investments portfolios, because that's all they do. All Grady Investments does is they research, they watch these markets, they learn it, they study it, they understand it, and they are in the trenches to make those decisions for you. So I love that you're bringing this value to the table, because it's cool to step back and take a look at, wait a minute, what all's going on, right? Because not only is there the war, you mentioned like oil prices and gold prices. Some of them are going to go up, some of them are going to go down. Again, hopefully shorter lived as far as the conflict and the war goes. But it's interesting to hear from you, Lisa, somebody in the trenches that's really in the know to, hey, a lot of this stuff was already kind of being priced in. Volatility, is that a new term? Absolutely not. Especially if we look at the escalate of the S&P 500, our U.S. stock market, for the last 2 years. It's really been on almost a straight up. I mean, it's been crazy. Now, was there absolutely there's volatility in there? I really think, and we'll talk about this probably more in the later segments of my show today, because it's one of the last things I want you to end with is, after we just came off of 2025 or 2024, 2025, and what the market did in that performance, which was crazy. What is the forecast moving forward into the rest of 2026? Obviously, nobody wanted to start off here with a potential war, Middle East, but here we are, right? If you remember, though, we kind of started off 2025 the same way, when the tariff talks were thrown out there and all this. So there was a lot of volatility, a lot of uncertainty, but boy, did the market just truly ramp up and finish phenomenally strong from that point forward. But let's talk. Is there anything else before I shift over to AI? How that software sell-off right now might be hitting not only tech sectors but other potential sectors, and how that bigger picture could be impacted. Is there anything, Lisa or Tony, you want to leave us and my listeners with when we talk about this Middle East conflict and global conflicts today?
No, I think you really hit it home when you said like diversification. That's all there is to it, right? And like you hinted already, we will probably talk a little bit later in the segment about something that is going on at the moment that also feeds into the whole diversification and the value of it and the evidence that this is really making sense. And also, like, there's so much uncertainty out there, right? I mean, with global conflict, policy uncertainty. You mentioned tariffs. That's still with us, right? It was a big thing in 2025, but we haven't shrugged it off. We still have to talk about it also in 2026 and still with us. And also everything that's going on, there's a lot of uncertainty. I mean, some investors might think, okay, there's so much going on. Markets cannot perform well with all of these troubles and problems, and they might wait on the sidelines. But here we are, despite everything that's going on. The last 3 years, 3 years of double-digit returns, despite all the conflicts, despite everything that's going on. And I think, I mean, you're in a business for a very long time. I do this a couple of years, Tony as well. I mean, there's not one single day out there where we do not have troubles, where we do not have problems or anything going on. And markets tend to perform well over the long run. And I think that's what it is about, right? Time in the markets and timing the market. I think that
that's huge right there. I mean, it's time in the market, right? A lot of people say, when do I get in? When do I get out? Well, you get in now and you stay in. as long as you're appropriately diversified, you're allocated, you're diversified, you're keeping an eye on it, you're not afraid to move it around a little bit, but you also don't want to panic and knee-jerk react like right now. It's not the time to do that. And there's also a really good saying is volatility or crisis creates opportunity. This is a really good time to reevaluate your portfolio, reassess your current risk level, look at your allocation and diversification. If you're, am I set up okay and appropriate for this? If not, don't panic. Just make those small tweaks or adjustments to appropriately allocate and diversify your portfolio for your risk tolerance and what's going on out there around us today. And keep an eye on it monthly and quarterly as we go through. And times may get worse, times may get better. Your portfolio needs to be adjusted along the way as well. So thank you for that.
Yeah. And you know what? We do need to take another quick break to let our listeners know how they can get a hold of you. I'm sure they'll have questions for you. And I know you have a hotline right to Lisa and can get information for your clients and for our listeners anytime they need it. So pick up the phone, give Jason and his team at Great Lakes a call. If you have any questions at all or want to set up that no charge, no obligation consultation, call 989-835-7203. That's 989-835-7203. And this is your Financial Empower Hour. I'm Tony Shore. I'm here with Jason Cryderman, our host, and our very, very special guest, Lisa Schreiber. Jason, I know we want to talk about AI. I can't wait to hear what Lisa has to say about what's going on with the markets in 2026, especially in relationship to AI.
Yeah, it's huge. You can't hardly in the last year or two, you can't hardly turn on a TV, a radio, a social media platform, even just have a conversation with a friend without hearing something about AI. But I think more importantly, we're not just hearing it anymore. Most of us are being impacted. Our daily lives are being directly impacted by AI. And I think AI is here to stay. It's only getting bigger. My personal opinion is there's a lot of good things about AI and there's a lot of not so good things about AI. So, but again, I'm not in the trenches. I'm just kind of an outsider. I take some of this information from the people like Lisa and her team to say, hey, here's what AI, here's the good, here's the bad, here's what could happen. Not always right, but here's the reality of what's going on today, right? So, Lisa, please, let's jump right in. AI software, there's been some sell-offs, there's been changes, and there always will be, right? There'll be ramp-ups and sell-offs, and that's natural. That's normal. Nobody should be freaking or panicking about that. But how are these sell-offs not only impacting AI in the tech sector, but how are these sell-offs or even AI ramp-ups going to affect other sectors? Because this goes back to diversification. I believe everyone should have some exposure to AI in the tech sector, but should you become oversaturated just because that's the next greatest wave and ditch all the other sectors? No, it all comes back to allocation, proper diversification, because what happens in one sector could definitely have a positive or negative impact on other sectors. So let's get into it, Lisa. AI, software, this sell-off stuff, the ramp up, how is that affecting AI? But more importantly, how is it affecting other sectors and the overall U.S. international markets?
Mm-hmm. I mean, you just said it very well. I mean, AI will continue to be an opportunity, both an opportunity and a disruptor, right?
Mm-hmm.
It's both of that, and it's also nothing new. So we have a little bit of a continuation from 2025 when these hyperscalers, right, the largest companies within the S&P, the Magnificent Seven, so to speak, mostly tech companies,
Mm-hmm.
they are really putting their foot on the ground and building out AI infrastructure and all of that. They are spending, last year it was a little bit over $500 billion. They're doubling down. It's over $700 billion projected to spend just on AI, right? Just to get us going with that and all the infrastructure.
What an investment. Oh,
it's crazy. This is eye-watering. I think no one really can compute
That's
these
real
numbers.
money even to you, Jason.
Oh.
So
I have no idea how many zeros. I can't count that high, Tony. That's too many zeros. That's just too much.
It's definitely hard to compute. So anyway, so like last year, investors were getting a little bit iffier and saying, hey, you're spending so much money on that. when are we seeing some returns, right? Not only what, all of this AI stuff can do, but when are we seeing some really return money-wise from that? Because we haven't seen all that much from it yet, right? It's still a whole lot of build out and getting the foot on the ground and getting some in innovation on the green grass, basically, but still not a whole lot of returns. So investors are getting a little bit more iffy. These companies we have to pay a lot of money to own these companies, so valuations are higher, right? What are the future prospects for that? And then people started last year to compare that to the dot-com bubble, maybe, right? Are we in an AI bubble? Is that gonna burst? What's happening? So there was a ramp up from that last year because of all of that spend that's happening from these very concentrated companies. So what was happening over the last couple of weeks is I think a lot of that continuation of some nervousness among investors, but also there's a different spin now on it, right? Some more sectors are affected now. So all of that AI nervousness and AI talks were mostly focused on these large companies, right? Magnificent Seven, hyperscalers, all of that. Now we have some implications for other sectors, also some old economy sectors like finance, trucking, and logistics. I mean, everyone no, okay, that this is what does that have to do with AI, right?
Right.
So we saw some more things going on over the last couple of weeks, and the reason for that was there was a company bringing out new AI tools, right? New AI agents, which can basically take a lot of the work in building software, right? And then there was a question, okay, do we all need these software companies anymore, right? That kind of build very, very specific software for very specific needs? Or can just an AI agent that they're getting like more sophisticated by the day, can they just do that and companies build that in-house for less cost, less employees, just more cheaper, more quicker, and with less human brain power, right? So all of these, so a lot of these software names kind of sold off. And but they were selling off pretty across the board, so there was not a whole lot of discrimination between them, not a whole lot of who is the winner, who is the loser there. It was just more brutal sell-off, I would say. And I think that also feeds into investors are just nervous, right, that this is more disrupting than opportunity in this area, which can again creates a lot of opportunities for investors in this moment. Because I want to be clear about this, there will be winners and losers at the end of the day.
Absolutely.
But it will be very, focused on where it is, and especially also to come back to why some old economy sectors like finance, for example, or trucking and logistics. It seems like the AI reaper is coming sector after sector in the last weeks. Well, there were new AI tools coming out to kind of make maybe trucking and logistics more efficient, right? Pressuring these companies. Then there were some new AI tools coming out with tax and estate planning and all of that, which where wealth managers were a little bit hit harder by that. So again, it creates opportunities, I would say, but we have to be cognizant about, okay, what is the disruption at the end of the day? And there will be disruption, that's for sure, but it's probably not as bad as it seems at the moment, right? Because all of these changes, that does not happen overnight, right? That takes a long time until people get comfortable with it and implementing it, until this gets really kind of ready for broader adoption. So again, I think it's a little bit overdone that every time when a new AI tool gets out, that people are just selling off first and asking questions later. That's basically what's happening. Again, it creates a lot of opportunities down the line if you're watching a little bit more closely underneath the hood. But again, that's how AI will still be, again, an opportunity on one side, making us more efficient, making companies more efficient, quicker, cheaper. But it will also be a disruptor, and we saw that disruption pretty much. What I wanted to mention, though, is, and that is something that we still probably talk later on, is despite all of that sell-off and the whole software sector sold off over 20%, which again seemed identified as a bear market. That's pretty significant. Interestingly enough, when we look at the broader index, the S&P 500, the overall how the S&P 500 performs, it has not moved quite that dramatically, how it seems, right? And that is interesting because there's a lot going on underneath the hood. where we see some market broadening, right? Some areas of the market that have like a heavy weighting within the S&P are performing not so well, a little bit troubled. Other sectors of the market are rising up and performing better, right? So then overall for the S&P 500, we still don't see as much of a disruption again, and that feeds to come back to your point, diversification. That if you are a diversified investor with a diversified portfolio, you probably did not even see all of that sell-off in your portfolio at all, right?
Yeah, that's absolutely right. I mean, you shouldn't. So, and now on the flip side of that, a truly diversified portfolio investor, market's up 20, you might not be up all 20 either. So diversification is really, you want to be aligned to participate in much of the upside as possible, but more importantly, protecting you from as much of the downside as possible. And so, like you said, because when AI goes up or down, or any sector, right, or any company, there's going to be positive to come out of it, but there's also going to be the flip side of negatives, whether it's in a different company or a different sector altogether. So being properly allocated, properly diversified based on your risk tolerance. And again, review as the world's moving on around us. Don't be afraid to review your portfolio. Don't be afraid to change a little bit, because if your risk tolerance isn't feeling right or your goals or objectives change, it's okay to change your portfolio and your investments. But make sure you stick to a disciplined philosophy of allocate and diversify appropriately based on your risk tolerance. And that really will, through the long term, help reduce the risk exposure and help keep a smoother portfolio, keep more money in your pocket overall, really is the overall goal and objective.
Yeah, that's huge. Well, hey, this will be our final break. We will come right back with more of Lisa Schreiber. And first, if our listeners and viewers out there want to get that plan in place, get a review of where they're at with their finances, get a portfolio review, all they have to do, no charge, no obligation consultation, pick up the phone, call Jason and his team at 989-835-7203. That's 989-835-7203. And this is your Financial Empower Hour. I am your co-host, Tony Shore, and I am here with our amazing special guest, Lisa Schreiber, and our host extraordinaire, Jason Cryderman. Jason, we've got about 5 minutes left. What's the final question you have for Lisa?
Well, first of all, I want to thank Lisa again. And, thank you, Tony, for being an awesome co-host and the connections you have for us. And thank you, Lisa, for pulling some time out of your extremely busy schedule to help just provide some more insight and from what I call in the trenches, in the know, what's going on in the markets, in the economies, and all this stuff going around in the U.S. and the world, how that might impact, the markets. And ultimately, at the end of the day, how it impacts people's money, your actual dollars you're putting into your 401k or the money you're pulling out of your IRA in retirement, whatever stage of life you're in, all this stuff will have an impact on you somehow. So Lisa, thank you so much again for being a guest on my show, being able to share your expertise, your knowledge, and your insight with my viewers and my listeners. This is an awesome experience for me as well as for them. So thank you again for your time today.
Thank you for having me.
Yeah, you're very welcome. So let's kind of put her on the hot seat. I've done this to Keith. I've done this is, all the other portfolio managers I've had on the show. I said, look, if you had 3 minutes left and this is your elevator speech, right? You're coming down the elevator, going up the elevator, and this is the interview of a lifetime. And your best career ever depends on the advice you're about to give right now. Miss Lisa Schreiber, what does the market look like potentially? And now remember, there's no, but what do we think our forecasting is for the market? Maybe top 2 or 3 goods, top 2 or 3 not so goods or bads. You're on the hot seat. 3 minutes, Lisa, go.
So I would say the biggest theme of 2026 is a market rotation and a market broadening out. That's basically the most important thing that's happening right now. And I think also the most exciting thing to happen. I mean, when we think of the last 3 years, great years of double-digit returns in the S&P. Mm-hmm. That was very concentrated, right? We talked about AI, very concentrated in tech names, and AI was a huge beneficiary to that, and they were basically driving the bus, while the other 493 companies didn't do a whole lot, right?
Mm-hmm. That's right.
And some investors always ask me, coming into 2025 last year, hey, why should I invest in anything different than the US? There's nothing else, right? And I was like, hey, being diversified, that first means you always have to clarify for, or justifying some part of your portfolio that might not work well, but leadership does change. And we saw that last year with international markets, emerging markets outperforming. Gold was having golden times. Now small caps are back from the dead, right? That hasn't happened in over a decade. And I would say multiple reasons for that. We have lower interest rates, which benefits small caps. We have a huge valuation dispersion between US and international. We have a weaker US dollar that benefits different areas of the market. We have ongoing geopolitical and policy uncertainties where investors might set themselves up broader. And I would say this is a huge opportunity as more areas of the market start participating. And we think that's a sustainable trend right now. The more smoother your portfolio returns will be, and the more balanced we will be going forward. And we will not be as dependent on just a very narrow set of markets. And we will just, benefit from a broader set of market that performs very well.
Love it. Yeah. And like you said, like, so the S&P 500, everything's, wow, look how good it's doing. But it really was that magnificent seven. It was 7 companies driving 80% of the market. So the broader and the growing says, let's look at other options, right? Let's look at not just the magnificent seven, not just the S&P. Let's look at other things real quick. 30 seconds, 45 seconds, Tony, whatever we have here. Lisa, what do you think about interest rates? Where might we go on the direction with interest rates yet this year in 2026? And what type of impact will that have on the market?
I mean, we had some discussions, right, about Fed independence. We have a new Fed chair coming in May. Then obviously the Federal Reserve is very data dependent, both on inflation, right, trying to get us to the magic 2%, where we are not quite there yet, but we are very well on the right direction. And then also the labor market, which we saw some softening and weakening of the labor market. There were some hiccups there. We're not falling off a cliff, but we kind of need that to observe what a Federal Reserve. Sure. So I think they're more in a wait and see approach right now, but we still can see 2 rate cuts this year. And I think the overall projection is more to the downside than it is to the upside, which is positive. Again, feeds into the market broadening, benefiting different areas of the market when we have lower interest rates and interest rates coming down. But I would say at the moment, kind of wait and see. The economy is just doing fine. We have the GDP, gross domestic product, grows right at long-term averages for both 2025, 2026. U.S. businesses are fantastic. Earnings growth, double-digit earnings growth, very much growing higher than long-term averages. So U.S. businesses are doing good. The economy is very resilient. So I think overall, good times ahead. And for interest rates, again, more to the lower side than to the other direction. And that is also a good backdrop for markets.
Wonderful. Well, again, Lisa, thank you so very much for all your knowledge, your input, your insights, and for your time today. Can't wait to have you back on the show. Thank you so much.
Thank you for having me.
All right. Well, great show today. Listeners, once again, if you'd like more information, have questions for Jason, just pick up the phone, give Jason a call at 989-835-7203. Get a financial and investment plan in place. Call 989-835-7203. And that does it for today's episode of your Financial Empower Hour with our host, Jason Cryderman, and special guest, Lisa Schreiber.